Hey everybody, Chuck Barone here. Monday, December the 12th, 2022. Less than 2 weeks till Santa comes. Yay! One of my favorite holidays, man. I love Christmas. I love the family get-togethers and the food and all the fun and stuff for the little kiddies. Christmas is my favorite time of the year. And on that note, I want to welcome everybody to the show. Welcome back. It's good to be back in the office, back from the dungeon over there at the Orleans Hotel. I got a little bit of a cold working its way out of my system, but it's good to be here with everybody. As always, we thank you guys for your support, the continuing support you guys give the channel every day. We appreciate you guys, especially to my buddy Greg Manarino. I just put the guy's name in my video and it doubled my amount of views. Wow, okay. Maybe I need to be a little more interesting. I don't know. Anyway, getting to the business here today. The markets. Weird market day today, guys. Stocks up. The Dow up over 500 points. I think this might be another one of those weird rallies like we had just recently, where the market went up and any little bit of bad news whatsoever can puncture the balloon, and there's so much data coming out this week. I think this rally is another mirage. Be very cautious in your trading. Bonds today going the other way than the stock market. Bond market down, yields up, not massively like they've been doing. The 10-year sitting at 3.61%, up 4 bips. The 2-year sitting at 4.38%, up 5 basis points. Not a lot of action in the market. Well, I mean, those are usually pretty big moves in the bond market, but these days the market has been a little more, what's the right word, volatile. So the bond market, usually not a place for volatility, bouncing, gyrating around. But these rates are really surprisingly low considering where the overnight rate is and is going in a couple of days. I think there's going to be another adjustment coming in bond prices. Dollar basically flat today. Not a lot of news on the dollar. 105.02 on the index. I think the dollar is just looking for a reason to come down. Can't find it right now, so it's kind of just drifting there. I think that once the dollar finds that reason, it's going to head down a little bit more. Metals market today, down day for metals. Gold down $16.30, $1,781 per ounce, still a decent price. Silver $23.28, down 18 cents. So not a dramatic decline. I think unlike the dollar, metals are looking for a reason to rally, and if that dollar starts to decline, that's going to be the big catalyst there. Oil today up $2.44 per barrel, $73.46 for a barrel of West Texas. That's a really cheap price compared to where it's been trading. I think oil demand was a little bit overstated. We'll see now. I think that sooner or later the U.S. government's going to have to start to refill our strategic reserve. We'll see what that does to oil prices, because that's millions and millions and millions and millions of barrels. We'll see. The gas market today, up 4%, continuing its wild ride. $6.50 for their million BTU. There's some concern here that Germany may break with the G7 and cut a separate deal with Russia for their gas and oil supplies. They're heavily dependent on Russia for those supplies. So now there's some, at least rumors of cracks in the United Front, because that would be probably the death knell for some alliances and probably for Ukraine too. Bitcoin today, up small, $17,171, basically unchanged. This week, huge data week. Today we'll get, I haven't seen it come across yet, but today we'll get deficit information from the Treasury. They're expecting $248 billion versus $191 billion last month. Yay, America. Nice deficit work, guys. We're going to do $250 billion in a month. We rule. Tomorrow on Tuesday, well, that starts the big Fed meeting. Actually, a really important day tomorrow. We'll also get CPI. and they're expecting CPI to be down to 7.3 from 7.7. I still don't think 7.3 is a great number, but it's got the market convinced the Fed's winning its fight. So we'll see what the number actually comes out at, and I'm sure the markets and everybody are going to react to that number. On Wednesday, well, Wednesday is basically, even though there's a ton of data coming out on Wednesday, Wednesday will be Jerome Powell, St. Jerome from Jekyll Island. It'll be his day because that'll be the day he gives his little market commentary and takes questions from the media, or at least the business media. The things he says can have a bigger impact on the markets than the actual CPI number. Also that day, we're going to get import prices. They're expected to be down 0.5% month over month. We're going to get the mortgage bankers index. The purchase is expected to be down 3%. I think that might surprise to the downside. On Thursday, this is the big day. This is the day where all kind of stuff's coming out. We're going to get business inventories expected to be up 0.4%. Capacity utilization expected to be 79.8, down from 79.9. Manufacturing expected to be down 0.5%. Industrial production expected to be down 0.2%. We're going to get jobless claims, which will have another big thing. We'll get the Philly Fed survey, expected to be down 15 points. We'll get retail sales, which are expected to be down 0.3%, but excluding autos, expected to be up 0.3%. So auto market crashing right now. And on Friday will be deep breath day. Friday is going to be the day everybody's going to try to digest all this information, figure out, their strategy, how they're going to play this market. It's going to be a really, really interesting day to see where things go, because all of this data is going to really present some questions and some answers in these markets. I think that the Fed's trapped, guys. I mean, they just have no choice but to keep their foot on the pedal. We're going to, and Wednesday, we're going to get that half-point increase we've all been expecting. It's going to bump that Fed funds overnight rate up. I don't know how that these bond yields are going to stay. I just don't see how they can do it. I mean, unless you really want to create this wild-ass inversion. And I guess, they say the inversion, how deep that inversion is, foretells how deep the recession will be. I guess, they're really expecting a pretty deep recession. If you listen to everybody now is coming out with the most negative sentiments I've seen about how the economy is working, what they expect next year, how they expect the markets to react next year. I mean, I've seen some people expecting the markets down 25% next year. And it seems to me that it's virtually unanimous that people are expecting a pretty serious recession. People are expecting a stock market decline, and they're also expecting the Fed to stay strong in the face of this economic stuff. It's a fascinating time to be alive right now, guys. We're living history, at least financial history. It's hard to figure out the trajectory right now. In my mind, it's down. I think that, these inflation numbers, if we're going to celebrate 7.3, I don't know if that's something that should be celebrated. What is that? 350% of what the Fed's target number is. So we're not even close to where the Fed wants to be. We're already feeling pain in the economy from these rate hikes because we've grown accustomed now to super cheap money. And it's causing a revision in the way people are handling their money. Although people are still taking on massive amounts of debt, sadly, it kind of sucks. It's going to be a fascinating time. And I can't wait to help you guys and bring you guys the news you need to make the decisions on what to do in your best interest with your money. Now, this was an interesting little bit of data today I got as I was doing my research for the show. The New York Fed, they do a monthly survey of consumer expectations. And this one was just fascinating to me. So here's what the consumers that were surveyed by the Fed think is going to happen over the next year, 3 and 5 years. Consumers expect inflation to stay elevated, but less than they did last month. So right now, in October, consumers expected CPI next year in October to be at 5.9%. So they're expecting all the Fed's work next year and what they've done so far this year to bring us down from 7.3 to 5.9. Well, in November, that went down a little bit. So now they're expecting it to be 5.2% next year. Well, we'll see, guys. I mean, there are so many things, so many variables. Oops, gotta sneeze. So many variables that can happen. Ooh, bless you. Anyway, so 5.2 they're expecting next November. They expect inflation still to be 3% in 3 years from now. So they expect in 1 year to take it from 7.3 to 5.2. Then they expect it to take 2 years to bring it from 5.2 down to 3%. And they're expecting in 5 years, the inflation rate to be 2.3%. Now, if inflation is 2.3% in 5 years, what do you think is going to happen to interest rates over these next 5 years, guys? Be prepared for it. We have a change in cycles. We're getting out of an easy money cycle into a pricey money cycle. Things are going to happen here. Here's the thing that I got out of this Fed survey that was the real surprise, though. Consumers expect a big price drop in food. But at the same time, they expect the cost of houses to go up 1% next year. I got a feeling they're wrong. I got a feeling that house prices will not go up next year. They just won't. Unless there's some miracle that I don't see in this market. Because I'm telling you, I sit in this office every day, and I know what's happening, at least here in Las Vegas. The amount of sales we're doing typically is around 3,500 per month. Lately, we're lucky if we're getting to 2,000. That's the only thing that's keeping prices elevated is a lack of supply right now. I think that prices have no choice but to come down. People can't afford to buy these houses. The corporations, the big private equity groups that have real estate funds are getting hammered and killed right now, i.e. hello Blackstone, hello Starwood. I think prices on houses have a ways to come down. I would like to see food prices come down, and I think we might get some relief. But overall, I still expect food prices to stay really high. I mean, it's just crazy what people are charging for stuff these days. Yesterday, my wife and I wanted a little lunch. So all we went and got was 2 of these little chicken teriyaki bowls. You guys probably have them in your neighborhood. Not a big fancy lunch at all. It's takeout. For 2 chicken bowls was $40. I almost fainted. Prices are up, guys. We're all feeling it. We're all seeing it. At least we're getting a little bit of relief at the gas pump, which is nice. But when you see gas prices coming down from, mid 5s to 4s and under 4s, and inflation is still 7.3%, not good. Not really good at all, guys. Anyway, I don't want to ramble on and on and on today. We got a full packed week of stuff coming up here. A lot of data, a lot of stuff that's going to be market movers and could be position changers in the way you have your own portfolio set up. So let's stay vigilant, guys. As always, follow the rules. Save as much money as you can. Spend your money carefully. Try not to take on any new debt. If you have debt now, try to pay it down, chip away at it, even if it's the smallest amount, and what you would consider an embarrassing amount to pay down on it, do it anyway. If you follow these simple rules, this recession, as bad as it's going to be, won't be the one that knocks you out of the game. Anyway, that's it for today, guys. We really appreciate your support. If you like what you're hearing, hit like. If, share the video with your friends, your subscribers. Don't forget to ask your questions in the comments section. Of course, as always, we appreciate your comments. Check your subscriptions and your notifications. Like always, every once in a while YouTube likes to do the purge. We appreciate the support. We'll be back tomorrow. Big day tomorrow. Yay, Fed. Until we talk then, guys, take care.